I'm a tech geek, and so I try to learn about new technologies, and I was always up to speed on blockchain, but I'd never really spent any time with smart contracts. And so I decided to mint some NFTs.
I remember that.
And they sold, which was shocking to me, but it got me understanding how smart contracts work. And in particular, when I minted it and it started asking me for royalties, and I'm like, I sounded like Kevin, right? Royalties,
yes.
Royalties. Tell me more. And so then it finally dawned on me that a smart contract on a chain is universal and standard, and the royalties that can be applied there change the game in terms of collectibles and digital file sales. And that, pursuing it from that side of it, was groundbreaking to me, and that really got me. First of all, Bitcoin is not a hedge to inflation. There's no world, no lifetime, no circumstances ever is Bitcoin a hedge. They're not correlated to the money system. It's a great narrative for selling Bitcoin, but there's no correlation there whatsoever. I mean, just look at recently, right? Inflation keeps on going up, Bitcoin go down. You don't see when interest rates go up along with inflation, it becomes more expensive for people to buy Bitcoin, and so it actually puts a lid on the price of Bitcoin, right? As long as you get more demand and less supply, the price is going to go up. But look at gold, right? They talk about gold as a hedge to inflation. Gold's not a hedge to inflation. Gold isn't a hedge to anything, right? It's just a store of value that is not even a very efficient store of value. Bitcoin's a more efficient, better store of value than gold. There's what, $10 trillion in people who own gold in one form or another. That's a market for Bitcoin to go after, and that and just other people looking for store of values makes it, a legit investment, and that's why I own it. But the whole idea that it's a hedge against inflation is ridiculous.
Okay, and
look, I can borrow money in 30 seconds. Look, I've got money in the bank and I want to borrow money against it. I got to call bankers and deal with forms and banks and all that kind of stuff, and it's a hassle. So, centralized money exchange is a hassle. Decentralized is a lot easier, a lot more efficient, even though it's over collateralized for the most part. It's still a better way to do it. So I'm a big fan. But the only qualification to that I'll give you is that DeFi, I said on stage, one of my favorite Warren Buffett sayings is, first there's the innovators, then there's the imitators, then there's the idiots, right? DeFi was a great innovation. Then there was a lot of imitation, and you're seeing it jump from chain to chain to chain, right? Now you're starting to get the idiots who are trying to, add one feature or this feature or that feature. So you've got to be careful. So DeFi, where you've done, DYOR, where you've done your homework and it's strong, is great, I think. And so like at the Mavericks, we give away NFTs to people who actually come to the games. And we try, and so they're free if you actually attend the game. You got to scan in, and when you scan in your regular ticket, you get a free NFT, one per account. And that's led to people collecting them, which has created the value, which in some cases, the value of the free NFT you get is of more value, and they've sold them more than the price for the ticket they paid. And so trying to create a value proposition for NFTs right now is the biggest challenge. But really, NFTs are, the way we're seeing them now, NFTs are collectibles, right? And collectibles are collectibles. There's things I collect, and NFTs and physical collectibles. I just think NFTs are a better implementation of collectibles than physical collectibles.
I mean,